Alright, bet. Today is the 2nd of May, and this video simply just going to be doing a weekly review for the NASDAQ from the 27th of April all throughout the 1st of May. And then at the end, just going to take a very small look at the two trades I took during the AM session for Friday's trading, which would be the 1st of May. But yeah, jumping into the weekly review, taking a look at the weekly time frame, we have that previous week's range right here. So we have the previous week high, equilibrium, previous week low, and then we have that weekly opening. And with this week's trading, we had that buy side delivery motion drawing towards our round figure institutional levels. So we've engaged with that 27,750, and we're currently approaching that 28,000. And then jumping down into the daily time frame. So on the daily time frame, you have that week opening right here, deliverance down towards sell side, and we actually take notice of the fact that during Tuesday's price action, we end up falling short of engaging with the equilibrium of the previous week's range, as well as the fact that we end up falling short of engaging with the devil's mark that was left from Friday's trading. So Tuesday being the low of the week, we have that reversal and we have that buy side delivery motion coming about. And then dropping down, taking a look at the hour forward, there's not much annotations because not much occurred during this week's trading, to be quite honest. But we have that week opening right here. And then Kraken correlation is established, inviting for that sell side delivery motion. We end up having price action falling short of the previous week's equilibrium, as well as that devil's mark right here. And from that point on, price action simply just meanders around. Kraken correlation was established here, inviting for that buy side delivery motion. And then we have very poor price action during the segment of price action here. Kraken correlation established again, inviting for that buy side delivery motion. So dropping down, taking a look at the hour one, getting a bit more descriptive look of what price action done over the course of this week. So we have that weekly opening right here, and the week opens, we immediately engage with the previous week's high. So week opens, we have that buy side deliverance engaging with the previous week high. And then we have price action returning back down into the range. Kraken correlation was established here, second stage offered, inviting for that buy side delivery motion. And then we have that Kraken correlation. So ES engages with this high. NASDAQ fails to follow suit. And this would be your Asia high from Monday's trading. So then we have that sell side delivery motion. Now I have a standard deviation projecting out in price anchored to the expansion leg. So the standard deviation is anchored from left to right instead of the typical right to left. So it's anchored to the series of down close candles and anchoring it to the bodies. And we have that -4, -4.5. And that's where we end up seeing terminus occurring right here for a point of inception for that buy side delivery motion over the course of the rest of the week. Now, we have that -4, -4.5, and price action engages with the -4 level, but the PD arrays that were inside of our -4, -4.5 would be this low right here, and then it would be the previous week's equilibrium, as well as this devil's mark that resides here from Friday's trading. Now, during Tuesday's trading, I was intrigued to see if we could potentially end up engaging with the equilibrium as well as that devil's mark from Friday's trading, but we end up failing to do so, and we simply just used this low as a point of inception. Now, this low is rather important. Reason why being is because this low formed at midnight opening. So we have midnight opening here on this candle, and we deliver it down in towards sell side, and then we continue that buy side delivery motion. So in relation to the IPDA data look back, it's 3 days. So if we're looking at price action from an intraday perspective, we'd want to be aware of price action from 3 days before, as that price action still holds weight. And as we go up in time frames, the more of a look back we end up having. So 20 days, 40 days, 60 days if we're looking at the higher time frames. But we end up having that sell side delivery motion, engaging with this low, failure to engage with the previous week equilibrium. Point of inception is established here. Now, the hour one is relatively clean in relation to the annotations. There's not much annotations going on here, and well and truly, it was just a lot of 15-minute framework that was being utilized over the course of this week during my trading. But point of inception is established here. There's no valid standard deviation I can look to utilize on the hour one to project up for that buy side delivery motion. The 15-minute offers, but the hour one fractal doesn't offer anything. we take a notice that we have a series of down close candles here, but we don't have a series of up close candles. So we don't have a clean change in staying delivery within this segment of price action. So I can't look to utilize a body standard deviation or a wick standard deviation on this leg right here. So we see price action, point of inception here, deliverance towards buy side, but the failure to have that change in staying delivery. And then we roll into Wednesday's trading, and we end up seeing Wednesday being very slow and lethargic for a majority of the session. And this is because we had FOMC on Wednesday. So the sessions ahead of our high impact news event are going to be utilized in a manner that is going to be beneficial for FOMC. So the engineering of buy side and the engineering of sell side. And when that injection of volatility comes, we can have the manipulation of one side to then distribute to the other side. So Wednesday, very poor price action, to be quite honest. There's really not much going on. And since the review for this week is going to be rather short, I've ultimately just decided that, okay, I'm going to take a look at the commentary that I was posting on my Telegram over the course of this week, because I think, if I'm not mistaken, it was Wednesday. It was to thread with caution, because this was not very nice price action to look at overall. But then we have Wednesday collapsing, we roll into Thursday's price action, 1800 buy side delivery instantaneously, engaging with that Tuesday and Monday high of day. Now, I'm not quite sure. There might have been a cracking correlation here. So there might have been a cracking correlation with this high. I don't have it marked out, but I feel as though there was. But we have that buy side delivery motion. And from this buy side delivery motion, we end up returning back down into the range. And all of this is occurring during our Asian session. And you don't like to see these type of moves occurring during Asia session, because it's going to open up for difficult conditions going into the later sessions. But we have that sell side delivery motion, and what price action is doing is delivering under this devil's mark right here, and this would be a time-based PD rate. It's 1800 that has presented that devil's mark for us, and this would be your settlement daily opening. So price action is delivering, correcting that devil's mark, forming the daily settlement low, and from the engagement with the devil's mark, we end up having that buy side delivery motion again. Now, going into this day's session, when I was doing my pre-session outlook, I immediately recognized that these looked like seek and destroy conditions in terms of when it comes to seek and destroy. So when it comes to a seek and destroy day, there's a lot of ways that seek and destroy days can unravel out, but they always hold the exact same premise in terms of buy side and sell side are always being engaged with in terms of a fashion like this. So we'll engage with buy side, we return all the way back down towards sell side, engage with sell side, return all the way back down towards buy side. And during this move, cracking correlations can establish themselves, as in for right here and right here. And in relation to seek and destroy days, I actually like seek and destroy days in terms of they're very nice in relation to the market maker models. You have a market maker buy model, market maker sell model, market maker buy model, market maker sell model, market maker buy model. So a lot of they offer a lot of point of inceptions over the course of the day in terms of reversals, which is very nice because I'm always located at a point of reversal. And there were two segments in which I was looking to engage with price action during this Thursday, and it would have been here, which was ahead of our 9:30 opening, and then it also would have been here, but this was missing a little bit of framework. This one I simply just did not look to engage with, but this one I was looking for a little bit of framework, but it just simply didn't offer that. And then we had that buy side delivery motion unraveling out. But in relation to this day, the cracking correlation established here is with the Asia high. Cracking correlation established here is with the London low. So we have that deliverance down towards sell side. London low comes in here under our devil's mark for the 1800 opening. Deliverance up towards buy side. Cracking correlation with the Asia high. Deliverance down back towards sell side. Cracking correlation with the London low. And then deliverance back up towards buy side. And with the deliverance back up towards buy side, we end up forming this imbalance right here, which is then utilized for an institutional order flow entry drill. So we have the 1800 opening for Friday's price action. Price action moves rather lethargic towards buy side as well as rather lethargic towards sell side, but we're gravitating towards this imbalance right here. The low of the day was established here, and then we have that buy side delivery motion in a very aggressive manner. We see a devil's mark printing on this 9 a.m. candle right here, and ultimately looking to engage with that 27,750, as well as falling short about 100 points of the 28,000 level altogether. But yeah, that would pretty much be it for the weekly review for NASDAQ. Simply just going to take a look at the trades I took over the course of these days, as well as the commentary I was having over the course of each day with the trading. So we had Monday's price action right here. I ended up taking a long position, and it was during the lunch session. So commentary for this AM session was very poor, which is very evident right here. We have a very poor AM session. AM session, poor conditions, clarity was offered after the 11 a.m. opening, projecting the move for higher, but simply just wasn't a fan of how price action was delivering towards buy side. And I was under the speculation that the move may unravel at a later point in time. And then we have that Tuesday's price action, and then we end up having Tuesday's price action. I took a short. I'm pretty sure I did a review for this trade, but take a short, ended up getting prematurely stopped out. Price action runs to draw on liquidity and our targets. And then where I was targeting for the short is where I ended up taking a long, because this is a point of inception. Projecting for sell side, there's going to be a point of terminus, and where terminus is, inception is also located as well. So this is where that point of inception is established. Took that buy side delivery motion and collapsed the trade. Would have been at the new day opening gap high, as well as the fact that this would have been your M15 SIBI high as well. And yeah, that would have been it for Tuesday's trading. And then the commentary for this was the first trade was a skill issue. I moved my above the mean threshold of the order block. I was just about stopped out. Trade would have hit TP. And then the second trade was terminus for my first trade, which means it's inception for another trade. And that is exactly what we ended up having occurring right here. And even taking a very close look at this price action here, inception, standard deviation projected out in price, -4, -4.5. We know that is where our terminus is located, and that would also be where inception is located as well. And then we have Wednesday's price action. So simply just put in 722, so it's ahead of 830. It's a pre-New York AM session. I'm looking at the markets on my phone, and thread with caution. Reason why is because where price action is located is at the equilibrium of the previous day's range, and it's just in a very bad spot in relation to where it was. You'd be looking for an injection of volatility either end of the range in order to engage with this type of price action right here. And then the trade that I ended up taking during the Wednesday's price action would have been a long. So I took a long here, ended up getting taken out break even, and what I was targeting would have just been right above this high, and that would have been your London high. Now, I actually wanted shorts from this segment of price action if price action engaged with the London high, but we actually failed to do so, and then we returned back down into the range, delivered under a discount of this range, and then look to execute off of this inversion right here, and was simply looking to target this TLP and that London high. And the commentary for this would have been, I wanted shorts around the 10:15, 10:45 mark of price action, but if price action was to engage with London high, price action fell short by 2 points, retraced back down into the range. TLP under London seemed like a clear draw on liquidity, but I anticipated a high resistance liquidity run towards London, which unraveled. But I just did not expect price action to just completely flip over on me. So we have that high resistance run towards buy side. I was anticipating that. Reason why being is because this move down towards sell side was low resistance. And as we know, where low resistance prints, high resistance is going to print back over. And then what I wasn't expecting was for price action to completely just reverse down on me. Now, of course, the term I used was getting dunked on. It just slammed down. And of course, because this is a high resistance move up towards buy side, so of course low resistance is going to print. But I was under the assumption that at least one of the correlated assets would engage with this high right here. But this segment of price action was simply engineered for a later point in time, which would have been the PM session, and which I did end up engaging with, as this was Wednesday's price action where we had the FOMC. And like I mentioned at the start, when FOMC is occurring, the sessions ahead are going to be utilized in a manner that is for engineering buy side and sell side. And that is what we end up seeing here. We end up seeing buy side being engineered under a time-based liquidity, and then we end up seeing that move back up towards buy side, more engineering. These highs are just stacking on top of each other once again. And then this is the trade that I would have taken during the PM session. So after our high impact news events, we had FOMC being right here, and then we had the second stage of FOMC being right here. Now, in relation to FOMC is a two-stage delivery news event. So you have 1400 and then you have 1430. If 1400 is to deliver down towards sell side, it's plausible for us to look for 1430 to do the opposite, which is exactly what we end up seeing here. So we have 1400 delivering down towards sell side, and then we have that 1430 delivering up towards buy side. So the commentary for this was simply, can see higher, but I can also see a mean consolidation. And that is essentially just what ends up happening, a very mean consolidation. We do deliver higher, and as we see, we end up engaging with that London high and engaging with what was the engineered buy side just under it. But after we engage with the London high, we then return back down into the range, which is what I was speculating. I was speculating the fact that if we are to deliver higher, it's going to be during the power hour, and it's going to be very expansive and explosive. If we are not to be delivering higher, London high would have been utilized as a point of inception to return back down into the range. And then the commentary was simply just the acknowledgement of the expansion and the consolidation. The next input I ended up putting in was, I'm pretty sure this was still Wednesday. Yeah, this is still Wednesday, and it was after the close. We're approaching the close of the session, and we're looking at the hour 4. We have a whipsaw candle that has been established, and this was the previous day's range. So the entirety of Wednesday was a whipsaw candle, being this 1400 candle right here, and then taking a look at the hour 1, just taking acknowledgement to what it looks like. Very, very ugly consolidation right here. And the commentary was whipsaw on the hour 4 and then hour 1 consolidation. Current structure looks uninviting, unwelcoming, and unwilling. And that's what led me to not engaging with the next day's price action. And then I speculated that the daily looked like it was going to slip into a phase of consolidation, but I wasn't quite sure, so it was simply just too early to tell. And the daily didn't slip into a phase of consolidation. I would say it was more the hour 4 that slipped into a phase of consolidation. So the phase of consolidation that ended up occurring would have been right here for the hour 4. In relation to the daily, we didn't really slip into a mean phase of consolidation, more the hour 4. And then some more commentary later on during the Asia session. So we have that 1800 opening delivering straight towards buy side, and then the commentary for that would be the 28,000 level looks appealing, but the buy side expansion is becoming very overzealous, and I view the overzealousness as creating a sentiment for the general public, as well as shifting the fear and greed factor. So in relation to trading, there is a fear and there is a greed factor, and the scale tips with whatever price action is doing. So if price action is, delivering new all-time highs as we're currently doing right now, the greed factor is in control. And if price action is delivering down towards sell side and we're dropping, the fear factor is in control. The overzealousness, I'm viewing it as, further shifting that greed factor to become even more stronger. Small little tangent away from the chart in order to just explain shifting the fear and greed factor. So in relation to the fear and greed index, this would be for the stocks. So right now we're currently sitting at greed. If we take a look at a month ago, we were sitting at extreme fear. And if we take a look at what price action looked like a month ago, this is where we were. Price action was delivering down towards sell side. Extreme fear was what was occurring. But during this deliverance down towards sell side, I was ultimately anticipating for price action to have that deliverance up towards buy side. So while everyone is fearful and while everyone is panic selling, these are opportunities for us to buy. Now, of course, I did not anticipate for price action to actually form its point of inception for that buy side delivery here. I anticipated it for it to be right here, but even still, I was still anticipating for price action to deliver up towards buy side around this segment of price action right here. So now we are currently sitting at greed, and right now what I'm currently anticipating would be price action to return back down into this range. Now I've stated multiple times that I'm not going to force this idea. I'm going to look for this idea to come into fruition on the higher time frames, but in relation to where we are currently sitting at, we're sitting at greed. I don't pay attention to the fear and greed factor all that much, but if we end up touching extreme greed, it's not to say that, we're going to instantaneously begin delivering down towards sell side, but if we begin to see bearish signatures presenting themselves in price action, as well as the fact that we have clear drawn liquidities and the time is also right, it is more than okay for us to assume that, okay, we are going to begin delivering back down towards sell side. But overall, that is essentially what I'm saying in terms of the overzealousness is creating that sentiment for the general public, shifting the fear and greed factor. So that deliverance up towards buy side, it's very aggressive, it's very expansive. We're having devil's marks at the opening of our bullish candles. We're just expanding very, very fast in one candles, making people assume that we're going to the moon and we're never coming back down. And then these would be the trades that I took on the 1st of May. So this would literally just be yesterday's trading. So we have that once again. Before I even touch on the trade, we have 9:30 opens right here. What does 9:30 do? Immediately deliver up towards buy side. We immediately deliver up towards buy side, and then we end up engaging with that 750 level, and then we continue that deliverance up towards buy side. Now I did anticipate maybe we would have had that engagement with the 28,000 level on Friday, but we didn't end up having that. So in relation to the trade, 9:30 opens, immediate deliverance towards buy side, and then we have 10 a.m. opening right here, consolidation of orders occurring around 10 a.m. And this was a very, very clear and classic open, low, high close in relation to the 10 a.m. opening. Now, I actually don't remember how 10 a.m. closed, but this is what I was framing. I was trading the manipulation leg right here. I was looking for price action to retrace back down into this leg. So cracking correlation was established here, change in stay in delivery, and an imbalance right here. Utilizing the imbalance and simply look to collapse the trade at the -2, -2.5 standard deviation. I'm not looking to target the -4, -4.5 because I'm looking to see a reaccumulation of orders occur here for price action to continue that buy side delivery motion. So I'm aligning multiple things right here in terms of, okay, I'm framing the 10 a.m. power of 3, as well as the fact that I'm aligning what the general motive and underlying motive price action is doing, as well as aligning myself with that institutional order flow being bullish. So I'm looking to see a reaccumulation of orders occur right here. And that is what I ended up doing in terms of taking a long position later on. So we have that sell side delivery motion, -2, -2.5, and then we end up having that buy side delivery motion. I'm not interested in it here. I'm still waiting to see certain signatures occurring. This still didn't offer the signatures I was looking for. We deliver up into this range, return back down, cracking correlation established, cracking correlation again, and then I'm looking to see this imbalance be utilized as an inversion. The moment we close above this imbalance, I execute the trade, stop loss at this low, and then we have that deliverance up towards buy side. Now these trades unfortunately weren't recorded, which is why I didn't look to do a analysis on them, because the account that I was recording on one of the phones, it was on the live account, and I didn't take any trades on the live account. So these would have just simply been prop firms. So these weren't being recorded. So yeah, I just didn't look to do an analysis, which is why we're just doing a very small analysis right here. But in relation to, okay, the short, I'm trading that manipulation leg down towards sell side, -2, -2.5. Right here resides an M15 imbalance. We're doing that time frame alignment for a 10 a.m. power of 3. Our 4 candle 15-minute PD rate that we're looking to see be utilized. And it's in alignment with our -2, -2.5, and which we know is going to be utilized for the reaccumulation of orders to redistribute or a smart money reversal. What ends up occurring here is a smart money reversal, but we are also reaccumulating orders for a higher time frame. So this would be the manipulation leg towards sell side, and then we're looking for price action to deliver back above our 10 a.m. opening. So once price action delivers back above our 10 a.m. opening, you could end up collapsing the trade there altogether, because in relation to the market maker model, you have your original consolidation right here, and then you have your terminus being right here. When we shift into the market maker buy model, it's more than okay for us to look to collapse our trade at the original consolidation. And in this case, it's actually very much okay and very much advised that we do so. Reason why being is because when we take a acknowledgement to this point of inception right here, series of up close candles, series of down close candles for your change in stay in delivery, and then you also have your standard deviation projected out in price. This change in stay in delivery was never engaged with when it was confirmed during this candle. It wasn't engaged with when it was confirmed. And when we return back up into it, we can end up seeing price action moving very lethargic around it, or it can end up utilizing it for sell side delivery again. And what ended up occurring here is price action utilized it very lethargically. So point of inception occurring here, standard deviation projected out in price, -2, -2.5. We end up seeing the accumulation of orders occurring here. For one, inside of this imbalance, and then for two, at this change in stay in delivery as well, which is why it'd be more than okay to look to collapse the entire trade at the original consolidation in this case, because this original consolidation could be utilized in an efficient manner for sell side delivery. But of course, we're aligning ourselves with the underlying narrative, institutional order flow, as well as the premise for what is unraveling out, with the acknowledgement that, okay, we've delivered down here to accumulate orders for 10 a.m. so that we can distribute orders above our 10 a.m. opening. And ultimately, for me, collapsing this trade would have been at this segment of price action. These are all indecisive candles, so we completely ignore them in relation to the formation of our order block right here. But on a 15-second, it would have been a TLP that I was paying attention to, and that is where price action displaces right through, engaging with all of this TLP right here. Yeah, so just jumping in, taking a look at the charts, simply looking to see price action draw towards this 28,000 level. Now, this can serve as a point of inception for that sell side delivery motion, but of course, we're going to look to see the signatures present themselves in price action in order for us to look to say, okay, we're going to align ourselves with that higher time frame sell side delivery motion. We could well and truly just continue delivering all the way up towards buy side. There was a standard deviation I projected for 30,000, but yeah, would simply look to see what price action does over the course of next week if we are to engage with that 28,000